And we are here on Real Estate in the Lowcountry, and we are going to continue our Anatomy of a Homeowner's Policy. With me today from Goosehead Insurance is Virginia Blanford. Thank you for being here.
Thanks for having me.
Yeah, so we've had Will, we've had Taryn.
Yes.
Now you're up to bat, and
yes.
we're going to talk about some different things about the coverage today. So we're going to start with Schedule D, and then we're going to get on to Schedule E. So let's start with D.
So Schedule D, this is your loss of use coverage. So typically in our area we have 50-50 split of primary and secondary homeowners. Right. For primary homeowners, you'd want to increase this coverage just because if there's a partial loss or a fire and they're remodeling the home and you can't live there for a little, this money covers that loss of rent for the year for you to rent at a home of the same size and stature of what you're used to living in.
Okay, interesting.
And then secondary homeowners, typically if you're not renting it out, I suggest decreasing this coverage because you have another place to live.
Okay.
But if you are doing long-term and short-term rentals, you should increase this because it will help you get that loss of rent that you would have been getting from a tenant during that time.
Very interesting. That makes sense. And of course, when here in the Lowcountry, we do have the threat of hurricanes. We're in hurricane season right now.
Yes.
So obviously you said fire, but that's another big thing that could be out there that would cause loss of use. And so as you said, for a primary residence to have that amount that would be sufficient is really important.
Yes, because if you have a claim, you want to pay as little as possible. That's why we have the insurance in place.
Exactly.
Yeah.
And how do you determine what that number is? I know you said increase it a little bit for primary, decrease it a little bit for secondary, but how do you go about really deciding what that number is for that loss of use?
Typically it's a percentage of what your dwelling coverage is, and if it's sufficient, usually we keep it around 20%. And then that's the average, and if you can decrease it or increase it from there.
Okay, and you mentioned, I think that you said it would be like for an entire year. You would,
yes.
you want to make sure that it would cover a year, even if you didn't need it for an entire year, but you would have that if it was going to be a year.
Yes, it would be through your entire policy term.
Okay.
So whatever's left in your policy, that's how much it would cover you for.
Gotcha. All right, and so then Schedule E, we're talking about liability. And so this is the kind of thing where somebody slips on your sidewalk or something like that, right?
Exactly. So it's unintentional actions. And what's cool about it is it follows you from your house. So if you were out in public and it happened and somebody sued you, you have that money to help with any legal fees.
Okay.
It does not follow you in your car though.
Okay.
Yeah, but we always recommend maximizing this on your policy because it's like a $10 difference between $300,000 and $500,000 of coverage, which would much rather pay $10 more a year. So
yeah, right. And what are some of the things? I mean, I mentioned slipping on a sidewalk, but what are some of the things that it really does cover? Like that would be something that you might not even think you needed it for, but it would cover it.
My favorite go-to example is when you're moving into your brand new home that you just bought and you're carrying boxes into the house and your neighbors come over to meet you and maybe you drop the box on their foot or something and hurt them. That's something that could help cover you.
Trigger that, yeah. Okay, interesting. And so again, when you're figuring out, you said to maximize that, and so does every policy kind of maximizes at the same level? It's like you said, 300,000 to 500,000, or
generally speaking, yes. So most of the carriers that we have, they max out at $500,000. And if you're willing and want more coverage, you can get a separate liability policy, which for if you have a high value home and you're really worried about being sued or being held accountable for something, definitely recommend going up. And you can get an umbrella policy, which goes from 1 to 5 million, depending on different carriers. And then we also have separate liability policies where you can just add an additional 500,000 to make it 1 million in total.
And somebody who, I mean, you already just mentioned that it's somebody who might have a really valuable home, but why would somebody else need to add those extra things?
Even if you don't have a valuable home, I know from my personal experience, again, if I have a situation like that on my hands, I want to pay as little as possible.
Of course.
And unfortunately, we're in a sue-happy world right now.
Yes.
So definitely just want to cover everything that you can.
Yeah. And so you take everybody from obviously Schedule A, so now we're into Schedule E, but you walk them through that entire process, right? So that you make sure that they're getting the exact coverages they need for all of those different schedules.
Yes, and we customize everything to make sure everybody's comfortable with what they're getting and to make sure they understand everything that's in their policy.
Yeah, because there is a lot to understand.
Yes.
I mean, we've done this for 3 different times, and we still aren't through everything. But so it's really interesting. Thank you for sharing today. We appreciate it, and we'll see you again soon.
Thanks.